Hey everyone, and welcome to another deep dive. Today we're taking a close look at Annuity Care from the State Life Insurance Company. Now, if you're thinking about annuities to secure your retirement, and you're particularly drawn to the idea of combining financial growth with protection for potential long-term care needs, you're in the right place.
Absolutely. We're going to unpack the key features of annuity care, but we'll make sure to touch upon those finer points that could really make a difference when you make that decision.
So you're thinking about your retirement, right? You want to make sure everything's taken care of. And you keep hearing this term annuity care, but what exactly is it?
Well, a lot of people are exploring annuities as part of their retirement planning, and this one from State Life Insurance Company stands out because it really focuses on two key concerns: financial growth and what happens if you need long-term care.
Yeah, it's billed as a single premium deferred annuity, but honestly, I bet that might not be clear to everyone. What does that even mean?
Haha. You're telling me. It does sound a little complicated, right? But it's actually simpler than it sounds. Single premium means you make one payment up front. That's it. No more premiums. You just get that out of the way, and then the money you put in grows over time.
Oh, okay, so no recurring payments. Gotcha. But then what's the deferred part about?
Deferred simply means you don't start receiving payments right away. Instead, the money grows for a set period, and then during retirement, you start receiving payments. But what makes annuity care unique is that it's not just about that retirement income.
Right, right. So it's not just about getting those regular payments later on. It's about having a plan for something else, something that can really put a strain on your finances if you're not prepared.
Long-term care.
Exactly. It's built to also help cover those potential long-term care costs, which can be a really big concern for a lot of people as they think about aging.
And let's be honest, those costs can be scary high.
Definitely. But that's where annuity care really shines. It addresses both retirement income and potential care needs, which, as we all know, can be really expensive. Absolutely. Now, something else that caught my eye was the option to convert existing assets into annuity care. I was wondering if you could break that down a little.
Sure. Let's say you have money sitting in different places, maybe a savings account, a CD, or even another annuity. With annuity care, you can take those funds and roll them over, consolidate everything into this one product. It's a way to streamline your finances.
So it's like you're gathering all your loose change and putting it into one big piggy bank where it has the potential to grow more effectively.
That's a great analogy. It's all about potentially maximizing your growth for retirement and those all-important long-term care needs.
I'm starting to see why this is so appealing. It's like a strategic move to get everything working together right.
Exactly. Now, remember how we talked about annuity care addressing both retirement and long-term care? To do that, it uses a two-account system. Imagine two separate piggy banks. One is for retirement income, and that's called your accumulated cash value, or AV, and the other is dedicated to long-term care, which is your long-term care accumulated value, or LTCAV.
Okay, I like the piggy bank visual. That's helpful. So my money is split between these two accounts, each with a specific purpose. Does that mean they both grow at the same rate?
Great quote. The LTCIV usually earns a higher interest rate than the AV. It's designed that way to help keep pace with the rising cost of care, which we know tends to increase faster than regular inflation.
Oh, okay, that's smart. That's like giving your long-term care savings an extra boost to stay ahead of those rising costs.
Exactly. And that brings us to the heart of it all, the long-term care protection itself. So how much coverage does annuity care actually provide?
Right. Let's dive into that. It's the whole reason we're here.
Well, the basic coverage offers 36 months of benefits, which translates to 3 years of potential long-term care support. But here's where it gets really interesting. You actually have options to extend that coverage.
Oh, like how much are we talking?
You can choose to add another 36 months, bringing it up to a total of 6 years, or you can even go for lifetime coverage. And this lifetime option is available not just for individuals, but for couples too.
Wow. Okay, so we're talking about the possibility of never having to worry about long-term care costs, even if you need care for an extended period, right?
That's the idea. And many traditional long-term care insurance policies have these limitations where the benefits max out after a certain number of years, or sometimes the premiums can increase over time, which can be a real burden. Annuity care is designed to address those concerns by offering the potential for lifelong coverage with premiums that never go up.
Okay, that's a big deal. I can see why this would give people a lot of peace of mind, knowing that those costs are taken care of no matter what.
And it doesn't stop there. Annuity care also offers a whole bunch of flexibility features.
Yeah, the materials mention tax-free withdrawals, a short waiting period, and something called a 1035 exchange. can we break those down? What exactly are tax-free withdrawals?
Sure, when you need to withdraw money for qualified long-term care expenses,
Yeah.
those withdrawals are completely tax-free. So you're not losing a chunk of your money to taxes when you need it the most.
That makes a huge difference, especially when we're talking about potentially substantial care costs.
It really does. And it's important to note that a wide range of expenses qualify for these tax-free withdrawals. Home care, assisted living, nursing home care, adult daycare, respite care for caregivers, and even hospice care.
So it covers pretty much every type of long-term care you could think of.
Yes, it's designed to be comprehensive and give you peace of mind knowing that your needs are covered.
All right, well, that's reassuring. And what about the waiting period? How long is it before you can actually access the funds?
Annuity Care has a 7-day waiting period, which means you can get to your funds relatively quickly after a qualifying event. This is a lot shorter than many other long-term care insurance policies out there.
Oh, wow. That's good to know. So if you need those funds, you won't be left waiting for weeks or months.
Yeah, precisely. Now, for that 1035 exchange you mentioned, well, this is really useful if you have an existing annuity and you want to take advantage of everything Annuity Care offers. The 1035 exchange allows you to transfer your funds over without being hit with any immediate taxes.
So you can essentially upgrade to Annuity Care without having to worry about those tax implications, right?
Exactly. It's a smart way to potentially enhance your retirement and long-term care planning without any tax surprises.
That's fantastic. Now, what happens if someone passes away and there's still money left in their Annuity Care account?
That's where the death benefit comes in. Any remaining funds are passed on to the policyholder's beneficiaries, so your loved ones are still protected, even if you never end up needing that long-term care.
Okay, so it's kind of like a built-in safety net for your family no matter what happens.
Right. It's all about ensuring that your financial legacy is secured.
All right, so before we wrap up, I just want to quickly revisit the lifetime long-term care benefit. You mentioned earlier that there's a Kakubi rider involved. Can you tell us a bit more about that?
Of course. The continuation of benefits rider, or COB, is what makes this lifetime coverage possible. So even if you use up all the funds initially set aside for long-term care, the COB steps in and continues to cover those costs for life. And here's the best part. The premiums for the COB are guaranteed to never increase.
Wow, that's incredible. So no matter how long you need care, you're completely covered and the cost won't suddenly skyrocket. That takes away so much uncertainty.
It does. It's about knowing that you're prepared for whatever the future holds.
All right, so let's recap everything we've learned. Annuity Care offers tax-advantaged growth, the potential for lifetime long-term care coverage, and a ton of flexibility. Seems like a pretty solid option. But as with any financial decision, it's important to carefully consider if it's the right fit for your personal situation. What are some things people should really think about when making this decision?
It's a great question. First, think about your risk tolerance. How comfortable are you with the idea of your money being tied up in an annuity? Then, consider your overall financial picture. Do you have other sources of income and savings to rely on during retirement? And don't forget about your family's health history. Are there any genetic predispositions to conditions that might require long-term care? All these factors play a role in deciding if Annuity Care is the right choice for you.
That's such a great point. There's no one-size-fits-all solution, and it's crucial to make an informed decision based on your unique circumstances.
Exactly. And sometimes it's helpful to speak with a financial advisor. They can help you weigh your options and create a plan that aligns with your individual goals.
It's excellent advice. Remember, folks, the more informed you are, the better equipped you'll be to make the best financial decisions for your future. Thanks for joining us for this